Thanks for saying welcome back. Vice President Dr. Mahamudu Bawumia says the $15 billion financial agreement with the Chinese government does not constitute a loan, but rather a joint venture agreement, saying government will cede 5% of the country's bauxite deposits for the money. Describing comments on the money as misinformed, Dr. Bawumia said the money will not add on to the national debt stock, but rather help in the economic transformation of the country. The Vice President was addressing an Africa-China Joint Research Exchange Program here in Accra.
As we sat down preparing to go to China, we understood very clearly that Ghana's space for borrowing was very limited or non-existent, very, very little space for borrowing to finance this sort of agenda. Because you had borrowed so much as a country, your debt to GDP ratio is too high. So we needed to think of a new strategy for which we could take to China to explain to China how we wanted to finance our infrastructure investment. We could not ask China to give us aid to finance this type of quantum of investment we needed. We could not borrow this quantum of money we needed. But we knew we had the bauxite sitting in the ground. So we said, this is time for a new model, a new financing model. China, by and large, has been lending money. That is the old model. And we are saying we can't borrow, but we know we have the wealth. So let us find a way. So essentially what we did was to propose a new way forward. We sought to leverage less than 5% of our bauxite deposits to unlock close to $20 billion. That was the basic plan, to say we have a needs of close 15 to 20 billion. We know we have 460 billion sitting in the ground. Can we reach an arrangement where we can leverage less than 5% of our bauxite reserves to unlock this 15 to 20 billion? And that agenda includes the construction, because we need this for construction of hundreds of kilometers of railway lines, roads, provide irrigation facilities, hospitals, schools, construct dams, and so on. This new model means that we are not borrowing money from China. Somehow people think that we've gone for a big Chinese loan of 15 billion. No. We are proposing a joint venture with China that we bring less than 5% of our bauxite reserves, which we own, and they bring the 15 to 20 billion. That is the joint venture. If another investor from another country comes, we can look at it. If they want another 5% for another chunk of investments that we want, we can look at it. But it's not a lending of money to Ghana. All we are doing is leveraging our resources.
Vice President Dr. Mahamudu Bawumia clarifying the financial agreement extended by the Chinese government to Ghana. Moving on, the IMF has confirmed it is in talks with government over the possibility of extending Ghana's program with the fund, but quick to add that the country is yet to send a formal request to the IMF ahead of its board meeting on Ghana later this month. George Yafi has more.
According to a statement issued by the IMF in response to some questions sent by Joy Business, the fund noted that any extension would have to be made formally by the authorities. And the IMF understands these issues are under consideration. This is despite claims by sources close to government that it has agreed in principle to extend the IMF program to December 2018. But it now looks like that intent is yet to be formally sent to the IMF, as the board prepares to meet later this month to consider this request and review Ghana's performance so far under the program. For some, the concern is that whether this formal request will be made on time so that it can be presented to the board later this month. This because this could be the appropriate time that the request can be considered if Ghana really wants to extend the program. The IMF in a statement also admit that the program targets, especially on how government can spend, would also have to be reviewed if the extension request is indeed granted. This is to ensure that Ghana will be able to achieve the set objectives at the end of the program. The fund also is of the view that it is prepared to give authorities more time to restore fiscal discipline as envisaged in the 2017 budget.
And the Ghana Revenue Authority is insisting the implementation of the VAT flat rate scheme would not result in prices of goods and services going up. This follows reports that prices of some goods on the market have been increased as a result of the tax. The Food and Beverage Association maintains the increment has come about because it cannot absorb the expected increases in cost of production after the reintroduction of the 3% VAT flat rate scheme with effect from July 1. Now, some of these manufacturers are also threatening to carry out some job layoffs and downsize. Now, Samuel Agri is president of the Food and Beverage Association.
Because of this reintroduction of this 3%, which wasn't so. Now, in the year 2000, we had 3% introduced by the then His Excellency President Kufuor's regime. What they did was that the GRA was finding it very difficult to, as it were, to pay or to collect some taxes within the business community. And the 17.5 imposition also, which was also introduced in 1997, was also another factor because it didn't allow all businesses or traders to pay. And it was actually an expensive thing. So people realized that what they have to do is to engage government on that level for them to be able to reduce it. But because government could not reduce the 17.5%, what they did was that they introduced the 3% flat rate for a segment of the market. Let me say businesses like those that you have around along the street, the small shops, the market itself, let me say Abosokan area, Makola, and then across the central business districts. So what they did was that when the 3% was introduced, it spanned beyond the intended period. It went up to 2010, where every year government announces a threshold depending on what tax they want to cut. So if it's about 10% or 5% tax that they want to raise, what they do is that they announce a threshold of maybe 50,000 Ghana cedis. So what it means is if you, the trader, you don't sell up to 50,000 in a year, you don't pay that 3%, neither do you pay even the 17.5%. So you have some money to plow back into your business until you get to the point where you're able to pay that 17.5%. Now, in 2013, there was a new tax regime that was introduced by Parliament. But what they did was that they could not introduce it to the general public until 2015, where they had the discussion with some traders, and they decided that, okay, in that point, then what they are going to do is to implement across board the 17.5%. One of the key promises of the MPP, now in government, was that they were going to reintroduce the 3%, which we saw that it was a good thing.
Away from that, the Institute of Energy Security, IES, says key determinants of fuel pricing are favoring a slight drop in the first pricing window for the month of July. The IES says international prices and for both crude oil and refined products have dropped by a decent figure, while the Ghana cedi depreciated marginally and fuel stock levels in the country also remain high. Principal Research Officer of the IES, Richmond Roxon, has been explaining these key determinants.
522.74% to $490.55 US, representing about 6.1%. Gas oil also fell from $424 to about $418 per metric ton. The cedi depreciated, but it wasn't significant enough. It was less than 1% from a previous average of 4 cedis, 32 pesos per dollar, 32 pesos to 4 cedis, 36 pesos in this particular pricing window. Our inventory is also okay. It can take us to about 4 weeks of national demand. Putting all this together, that's how come we projected that we expect prices to drop in this window by about 1.52%. What has changed is that the price on the oil market, that is the international oil market, continues to fall. We know that even though OPEC had a decision to up production by about 1.8 million barrels, we still realize that from U.S., that's the shale production and other non-OPEC members, production continues to increase by the day, which is mitigating the effects that we would have seen if OPEC was the only body that was producing oil.
Now, the Greek Minister, Dr. Akoto Ousuafiyi, has hinted of plans by the government to engage banks to help secure funding for fruit and vegetable production. This is coming in the wake of the ban on fruits and vegetable exports into China and Europe over quality standards. Government is, however, engaging Chinese authorities while working with stakeholders to have the ban lifted by September, when a team from the European Union visits the country for a review. The Greek minister says plans are also underway to find a lasting solution to the financing challenge of the exporters to the economic benefits.
You know that vegetables, fruits and vegetables are more delicate products. So they have a different requirement in terms of the refrigeration and the handling. It's more expensive, it's the high end of the market. So it needs specialist interventions of the private sector, of the kind that we've seen here exhibiting their goods and the people that we met this afternoon. We need to make sure, as they themselves said, that they are well heeled when it comes to financing requirements, because their financing requirements are much higher than ordinary agricultural produce. And we'll be talking to the banks to ensure that once the ban is lifted, they will make facilities available for them to expand their activities so that whatever we've lost in the last 2 years, we can catch up in a very short period of time, to add to our portfolio of agricultural exports to enhance production and export earnings in this country.
Meanwhile, reacting to the ban on vegetables and fruits in the country, now, President of the Concerned Farmers Association, Nana Oboade Opambo Boateng, says there's more to the issue than just working with farmers to lift the ban.
Yeah, the whole issue is like we are not serious as a country, because I have not heard Cote d'Ivoire being banned for this, even Togo here being banned for this. But why Ghana? All because measures that are supposed to put in place are not there. Talking about a code room and the other things, where are they? And one, there was even an incident that a code van was even given to the vegetable farmers just to use. This code van, there's no whereabout of the code van as I'm speaking to you. Yeah. I even reported the time that Honorable Fifi Kwete was the minister. I even confronted him, a program, and even questioned someone that where is the code van? The person just said, Honorable, this and that, and up to now. So it's like Ghana is a country that everything that you see it on TV and other things are documented. When you talk about policies, we are very good, but implementation is weak, and we don't do it at all. Because how come all this thing is happening? Somebody did not do his job somewhere. That is why all these things are happening. And then talking about standardability and other things, we don't have it here in this country, unless the export side. And we are not together as one. That is another problem. That is what we have to check, because fine, everybody won't go into export. Everybody won't go into export. If we have a group, or let's say a group, in a way that if you want to maybe export your mango or maybe tomato to this and that, you'll be tagged, let's say, from AB, so that when your product goes to the place and then there's a problem, you will be notified that it was your product. But in Ghana, we don't have such a thing. I don't know. Because they are serious with their farming activity. You can't compare Cote d'Ivoire to Ghana when it comes to agri. No, they are far ahead.
Let's look at some of the things they're doing.
Because they do they have a code van which will carry the stuff from the farm to where the destination of the thing. But here we don't have it. You will see mangoes being packed on a truck. The other day I saw even this van, caravan, taxi caravan, full of pepper for export. Just imagine. So it's like we need to do our things very well, because when you go to Abidjan, they have their vans and other things that packed all these things. Very nice, cold van and the rest. But let's ask Ghana, how many cold vans do we even have? How many storage facilities do we even have within the district? That maybe if you want to export your pepper and other things, you will just send it there and then the van will just come and pick it up. We don't have it.
And that was an Industry Watch segment. Now for some stock market updates. And the capital market thrived during last week's 4-day trading week and has started this week on a bullish note. Crude oil continued to dampen in price with a weakened demand, and the Ghanaian currency expected to record mixed trends against the three major trading currencies. Let's now go live to our stock market analyst, Aseya Kotia, to give us more explanation on these figures. Good afternoon, sir. Welcome to the marketplace. Hear me, how did the market open today?
The market has opened on a very good note. We have as many as 3 equities already recording some price appreciations. You have GOIL that's added about 30 basis points. And you also have, I think Guinness Ghana Limited also added 10 basis points. And so total volumes also traded as quite impressive, considering today just being the first trading day of the week.
All right, so last week we saw some good performance by the financial stocks. Are we seeing a repetition of this particular performance, or some other stocks have taken over? FANMO.
FANMO dominated the trade volume and value, but on the price chain, you had the financial stocks still dominating. You had, I think, about 4 banks or so recording some good movements, even though Access recorded a price dip. I'm expecting this week to follow a similar trend. You expect Standard Chartered Bank to lead that chart. They currently trading close to their year high and still have a lot of demand, outstanding demand as well. So yes, we expect some good representation from the banking stocks this week.
And how do we expect investors to behave towards these changing trends?
We expect them to still continue with their demand. Investors still can look at the banking stocks. You can also look at the petroleum stock being GOIL. GOIL has had an impressive run so far. And like I said earlier, recording 30 basis points price gain so far today. So you can still continue looking at the petroleum stocks as well. Enterprise is making a case for the insurance stocks. I think following the news of the Blackstar Advisors being leapfrog, buying out Sunlamp and putting over $100 million in the stock, they're good prospects, and investors are responding accordingly. So Enterprise Group Limited also is a stock that you should look out for. FANMO also has a lot of steam. I believe that this week also will be a good week for FANMO. It might not record the kind of volumes recorded last week, but I'm still expecting a good show from FANMO this week.
All right, now let's go to the commodities market, and we are expecting crude oil to further dampen in both price and demand. How would it affect our stock market?
It might not have a direct link with the stock market, but indirectly, yes. Investors, now our market is very integrated with the international market, and you have the same funds chasing all the stocks. So if you have demand slowing down from outside stocks, being the international investors, chances are that you have some of these monies chasing your local stocks here. So for the stock market here, it could be a positive. You could have investors looking towards our market. Nonetheless, it's US, for instance, which is one of the major demanders of crude oil, currently has about 3% dip in their demand, which is reflecting in the price that you're seeing in the crude oil. And nonetheless, I expect the next couple of weeks, they expect them to bounce back. Currently, as we speak, they're trading below the $2 per gallon mark in the US, but that also, I believe, will be only for last week, this week. And next week, next 2 weeks, they should bounce back. So we expect crude oil to get some steam a bit, but generally speaking, this market, being the local bears we have here, should benefit positively from the outspill or the outflow of stocks or investors, funds that is out there looking towards our local bears.
All right, and let's also look at the gold and cocoa. How are they doing out there, and how are they expected to impact our markets?
Okay, gold and cocoa so far today are recording some good trends. Gold is trading on the positive, and so is cocoa. Nonetheless, they still have also issues with the demand. Cocoa is not necessarily a demand problem, it's a supply problem. The previous trading cycle for cocoa had a lot of supply. Côte d'Ivoire, for instance, actually breaking the kind of barriers they put for themselves, the kind of marks they put for themselves, and so you still have the problem of excess supply for cocoa. So you still expect the price gain on cocoa to slow down. Gold generally has a demand problem. Supply hasn't increased that much, but the market for gold has dipped, especially the Asian market. So that's also affected negatively. And like I said earlier, once you have investors who are willing to look at stocks outside these three major trading commodities, chances are that our local bears could benefit from the spill.
Finally, to the currency market, where we are seeing a kind of a mixed trend or reaction as against, between the Ghana cedi and the other trading currencies, the international trading currencies, three of them. How is the link?
The Ghanaian cedi has suffered a bit. If you look at a year to date, taking probably half a year, it has dipped against all these three major trading counterparts. However, it's had a better performance with the dollar, mainly because of the kind of inflow we have in this country, being dollar. So sometimes you have a supply that kind of evens it out, creates a balance. For instance, the IMF is currently having this review on Ghana. If everything is positive, which we hope would be, you have over $100 million coming through that would further stabilize the currency. And so we expect the cedi to hold its own against the dollar continually, but against the pound and the euro, we must shed off some steel pesos.
All right. If there's no other information we need to know, I would want to thank you for your time and the analysis given to us. Asseya Kotia is a stock market analyst. Let's now take a break for our investment tip.
Investment Tips is brought to you by Daffin Finance, Deposits, Investments, Borrowings and Advisory.
What is the investment objective? This is the goal or reason for the investment. Have clearly defined goals. Growth of principal, aiming at growing or increasing the value of your initial investment. Income generation, aiming at providing periodic income. Capital preservation or security, aiming at protection against inflation or loss.
Investment Tips was brought to you by Daffin Finance, Deposits, Investments, Borrowings and Advisory.
And that will be it for this afternoon's edition of The Marketplace. Many thanks for your company. My name is Emmanuel Abuaji. Have a good afternoon.